Time now for Futures in Focus. The Bloomberg Commodities Index has lost 3% this week as trade tensions continue to cast a shadow over the markets. Among the hardest hit commodities, soybeans. Oliver Sloup of Blue Line Futures joins us from the CME. Oliver, what will be in your targets next week?
Well, soybeans have been hit very hard over the last month and a half, really, since the trade tariffs have been announced. I think beans are about down 22%. And I think a lot of this is psychological and headlines and big hedge funds wondering, how do you hedge a trade war with China? And I think the biggest and best way to do that is sell U.S. agricultures. And I think that's been playing a big role in this mass exodus in soybeans. We know that the funds have had a net long position just 2 months ago, and now a flip to net short. On top of that, we're in the middle of a growing season, which has provided phenomenal weather, which means we're probably going to get better than expected yields. Now, when it's all said and done, I think as we head towards the end of the year, we're going to see the demand start to shift a little bit. Just because China is going to Brazil to buy U.S. beans doesn't mean that the United States demand just dissipates. I think it more or less shifts. So with the Brazilian beans now being at a premium to the United States, you're seeing previous buyers of Brazilian beans turn their focus to U.S. beans, and a big player, I think, is going to be the EU. So we might see some demand fluctuations here in the near term, but in the longer term, I think U.S. beans are at a nice discount at these prices and could provide tremendous value going forward into the end of the year.
Right. How much are you focused really on just the US-China conversation, and how much are you really looking at Europe and also the NAFTA negotiations, which seem to have completely stalled?
It's obviously played a huge role in price action, not only in the agricultural markets, but in commodities as a whole. We've seen the volatility pick up, and volatility oftentimes invites more volatility. And for traders like us here at the Board of Trade, volatility presents opportunities. So we continue to kind of search for those golden nuggets, and sometimes the best trade is no trade. So I think in terms of the soybean market, trying to find a value target in a support area in this uncharted territory is a fool's errand. So we're waiting for the dust to settle on some of these things and would rather be buyers on strength. So if we can get soybeans to get back out above 875, I think you head in and buy on strength as you look for funds to start to short cover.
Gold and natural gas, they've both been trading in very, very tight ranges just for a long time now, Oliver. Do you have any sense of if there's anything about to happen with either of those, or indeed any other commodity?
Well, oil's been a big one we've been watching. We saw the biggest decline in 2 years on Wednesday, and I think that provided an excellent buying opportunity. The path of least resistance has been higher for the last 6 months, or the first half of this year. Higher highs and higher lows. We continue to believe that demand is going to continue to expand, which will provide opportunity to the upside. And we're really looking to see this market exceed $80 by the end of the year. So we're looking at pullbacks as an opportunity to buy. Obviously, $70 has been a psychologically significant area that the bulls have been able to defend, and I think so long as they can do that on a closing basis, they remain in total control here.